All right. Hope everyone's having a nice weekend. This is market update number 2. We're going to be going through more of the traditional markets on this one, starting with SPY, Nasdaq. We'll do a couple stocks actually that I haven't done. We'll do Tesla, NVDA. We'll look at the dollar. We'll look at yields. We're going to look at ETHBTC, and then I'm going to throw a chain link in there as well because I think it's a nice depiction of the type of breakouts that you like to see in this market. So let's first start with SPY. And I didn't do a video last week. I tried to do a video last week, folks, and I uploaded it, and I think my computer restarted it and it screwed it up. By the time I figured it out, I just deleted it. It was like Monday or Tuesday. I think the last time I did this video, if that was 2 weeks ago, was somewhere in this range, possibly mid-January, where we were kind of in the process of this corrective move after what I'm calling this minor, we made a corrective, nasty little running flat type of ABC correction, and then came out of it, and then we had that Friday sell-off, which turned into just being a bear trap. Or was that a Friday sell-off? Let's see. No, that was, excuse me. That was this past Wednesday that turned into be the bear trap and marked what I believe is this little local subwave 2. And now it appears to me that we are in the midst of continuation in this third wave, this 2 to 3 move. And so if I'm wrong, where would I be wrong here? Let's see. Well, if we come back down and breach these lows at 481, then this count is wrong. And then I'd have to reevaluate possibly something in that direction. But for now, this uptrend remains intact. It remains strong. It seems to me to be getting stronger. And when we define uptrend, right, folks, as I've been doing this since the beginning of the year, that's been our trend. That's a clear uptrend. And as we get further along in these uptrends, what I expect to see is, and we may not see it. Again, I'm not a financial advisor. Just a reminder, don't take this as financial advice. Use this as educational purposes only. Do your own research as always. But what I expect to see is the rally getting steeper. The rally getting steeper as folks are misallocated. And again, I contend last year, my guess would be that most hedge funds didn't beat the market, much like coming out of the COVID lows in 2020. A very small percentage of hedge funds beat the S&P that year. And so now as we enter price discovery and all-time highs on the S&P, and the bearish thesis, the double top thesis gets invalidated, and folks have to recoup the losses from the previous year and allocate to the long side of the market, that, in my opinion, is what can really propel this thing at an even faster pace than we've been moving. And so, again, these counts always change, right? I always kind of move them around. I don't know the path. I'm just trying to give you what my forecasted approximation is, and then we update the counts weekly. But for all intents and purposes, it's been pretty close. So let's hope that it continues to be to follow this path closely as we continue to move forward. But as always, nothing is guaranteed. Next, we're going to move into the Nasdaq, and the Nasdaq has been behaving exactly as I've been hoping and kind of forecasting here, folks, right? I kept drawing parallels for those of you that have been watching this video in where we are in this subwave 1, 2, 3, 4, 5 back to where we were in coming out of the COVID lows. And remember this nasty correction that occurred here from July through October. I was drawing a lot of parallels to that sub 3-4 back in the summer and fall of 2020. And so behaving very similar in fashion to, we had a multi-week correction, we had a breakout, you didn't have any real good retest of this area, and it just kept drifting higher and higher and higher. Well, in this case, we did have a consolidation, we had a breakout, and we had a nice little retest of an important area that I'd marked off, this green rectangle, which marked the subwave 5 peak, primary 3 peak back in February 2021. So we had that retest, and now for all intents and purposes, that's a successful retest, and it looks to me like we are in the midst of continuation. On the RSI on the weekly, we finished the weekly over 70. That's exactly what I want to see. That's exactly what I want to see in the early stages of continuation, much like we saw back in June, okay? That was right around here. We had continuation, much like we saw back in coming out of this breakout back in December. We had a good 3 months of continuation. And so that's the bias at which I'm going to continue to look at the path forward. Is it going to be a straight line every week? Probably not. But again, I view at least a few more weeks, if not a good month of continuation before any type of primary 3-4 correction prior to resumption much higher. And so that is the recap on the Nasdaq. Now let's look at Tesla. Just hearing a lot about Tesla and a lot of bearish posts about Tesla, and I just sought to throw this in line chart. This is a weekly chart, and just going level by level all the way back to 2014. And Tesla is a great example of really only rewarding the hardest, those with the hardest and strongest convictions. I mean, Tesla didn't do anything from 2014 to 2016. So 2 years basically sideways in a range. You break out of the range, and then you're in a new range for another 2 years. You deviate out of the range, you reclaim, and then you get a lifetime's worth of gains from essentially June 2019 to January 2021. So what's that, a year and a half of a lifetime worth of gains in a matter, where did it go from 12 to 280? So almost a 20x move. And so that's Tesla for you. And so what have we been doing over the last couple of years? Kind of the same, right? I'm kind of seeing the same character, range, deviate out of the range, reclaim, and then go. There's potential for that same type of character here with Tesla, right? You've got a very well-defined range, a deviation out of the range, reclaim, kind of flagging back into the support area. Now, if this area holds, my assumption would be at least top of the range until proven otherwise, because this is the range, and Tesla has acted, and until proven otherwise, and there's no guarantee, right? What's happened in the past doesn't mean it's going to happen in the future. Has shown that not only deviations and reclaims of ranges, but retests of ranges have led to, at a minimum, top end of the range, and that's 343. So depending on how this acts, and this is at an area that's very confluent. What do I mean by that? Well, you have kind of this nice flagging, consolidating structure, much like we had in the spring of 2023, much like you had in the spring of 2021. And so given that this area holds, my expectation would be swift resumption to the top end of this range, 345, something in that area. So that's how I'm viewing Tesla. Next is NVIDIA. And the reason I'm charting NVIDIA is just an example of powerful trends and letting the trend do the work for you. And for those that think that this is a good short or this is a good place for this to stop, I'm not so sure. I'm not so sure. A great example of Wyckoff in NVIDIA, we had a very nice Wyckoff accumulation range, August, summer of 2022, deviation, spring out of the range, last point of support, and then it went. And a lot like I'm talking about with Bitcoin, when you have strong accumulation events, and this is a weekly chart, and this is an accumulation event that I contend lasted May of 2022 to January of 2023. So that's a pretty significant in time accumulation event. And, you know, a lot like we see with what folks want with Bitcoin, which are these nice retests and give me a good entry, right? So let's just draw a line out all the way. Did anyone get this retest? No, no one got that retest. No, the market went away. The market moved away from them. Market moved away, and then consolidated at the 1618 extension from all-time high to local low, 1618. Consolidated in this rectangle type pattern, and then broke out. And so much like my expectation is, and I could be wrong, but much like people that were waiting for that beautiful retest might be saying, all right, I'm gonna jump in NVIDIA on a pullback. That would be weak to me. That's a sign of weakness, pulling all the way back here. Much like pulling back to such a significant breakout area is a sign of weakness to me. You know, if people are expecting to jump back in here, well, you know, watch out for something like that, right? People are expecting to jump out here. I would be more inclined to say, watch out for something like that. Just my view on NVIDIA. For all intents and purposes, this thing looks like it wants the 2618, 3618 at 939. That would be the real intermediary target for me. This this region right there. Okay. Next, the dollar. All right, we did another little reset here. I don't know why that does that sometimes, but it does. No big deal. We're going to play with it. We're going to roll the punches. We're going to jump to the dollar on a weekly time frame, and we're going to take a look. And so the dollar, this is a pretty powerful counter trend rally that we're working with right now. I think this week is pretty critical in terms of what's going to happen with this trend. Whether I'm right in my count or I'm wrong in this count, I think comes down to what happens this week. In the confines of my current count, it's still valid. Counter trend rally into supply. But what happens if this supply area gets flipped? Well, we had our lower high, we had a lower low. If this comes up and flips this area, now we've got, you know, a new higher high, and that's a trend change. And so at that point, I'd have to reevaluate the way that I'm looking at the dollar. But until then, I'm not going to reevaluate. Most certainly has come back further. This counter trend rally has extended much further than I had expected. Now, if I throw up the 21 and 100-day moving averages, let's just do a little exercise. And let's see if we got any useful information there. We had a cross 2 weeks ago where you had the 21 simple moving average move below the 100-day simple. And so what does that mean? Well, that's potentially a bearish cross. Let's look at where else that's occurred in the past. Well, that occurred back in August of 2020. That cross led to continuation to the downside. Bitcoin risk assets performed really well in that time frame. We also had that bearish cross occur back in July of 2017. Bitcoin and the Nasdaq went on for amazing runs at that point as well. So we'll see. We'll see if we can get confirmation on this cross this week, as well as I really want to see. What I want to see is a decisive rejection and a big red candle to really confirm not only the cross, but this counter trend rally being over and not setting a precedent for a new local high and a trend change. So that's how I'm approaching the dollar. Next, we've got yields, and I've got the daily chart of the 10-year. And this continues to cooperate and follow a path pretty close to how I've been visualizing it. And so this whole area, remember, and this goes back to what I just said about NVIDIA. Important areas that everybody's looking at to get retested, especially after very strong consolidation patterns. You don't want to see those tested. That's a sign of weakness, in my opinion. Example, this massive, ascending triangle. This is a massive upwards consolidation pattern, and it was broken out of. If this really had strength behind it, I don't want to see a retest here, which everyone, oh, that's the retest and go. No, that's a sign of weakness. If this trend really had this much potential energy, it would blow and it wouldn't stop, like I shared with you on NVIDIA. And so coming out of this, I'd mentioned wanting to see the reaction at this area. You got a little dead cat bounce, but then you got a breach, and then we got rejected on the underside of this trend line, and then we had formed a little bit of a bear flag into the Ichimoku cloud, broke out of it. We had a little counter trend into the cloud, but my expectation continues to be yields pressing down. What changes that? Well, you'd need a very technical type of move up here, right? That something like that changes it, but we don't have that. We're still in a downtrend as I see it until proven otherwise. All right, ETHBTC. ETHBTC still looks constructive to me, folks. Still looks constructive to me. We've been talking about this demand supply zone that goes all the way back to March 2017. We wicked below it, had a strong candle reaction. Let me zoom in. I just wanted to have it zoomed out so you can see how important that level was. We wicked below it, created a bullish divergence with RSI, which I don't have shown up right now. And now we're just getting a kind of a back test into this zone. And this is an area, so I just talk about not wanting to see back tests into critical zones. There's two scenarios where, in what I'm talking about here, folks. Let me be very clear. Scenario number one is you have a bullish market, okay? Market in an uptrend and consolidation and breakout. I don't want to see major retests in those situations. This market is different. This has been in a downtrend. This has been a weak market, okay? In these situations, this is completely normal. That's completely normal. So don't get it confused when I'm saying, oh, this retest is okay, right? That Kush just said retests aren't what he wants to see. No, I don't want to see retests after strong bull expansive trends. I want to see that energy release to the upside. In bearish trends, that's a different story. This has been a bearish trend. ETHBTC, bearish trend since August of 2022. And so here we simply have a very quick reclaim deviation retest, completely normal, completely healthy in a bearish trend reversal. And so now I'm watching this area, right? What we don't want to see is coming back under here. That's really bearish. That's a failure. This is a swing failure type pattern, and that would not be a good look. What we want to see is some consolidation here is fine, and then I want to see, well, consolidation here is fine, and then I want to see how it reacts when it kind of hits this, if it hits this area, right, and does something like that. Okay, ETHBTC. Next, others. Others is down here. All right. Others weekly chart continues to look the same as it did the last time I did this video. We have not much new to report, folks. And sometimes that's why I skip charts. Like gold, for example, looks exactly as it did the last time I presented it, still in its consolidation bullish structure towards range highs. Others looks the same, right? We are just simply consolidating over a critical supply demand area. And that's this green rectangle. Supply demand area was flipped, right? This was very key supply that held the market down for almost 2 years. And so we're above it and we're consolidating. And what we're not seeing, and a lot like I mentioned in my Bitcoin video, is, yeah, we aren't seeing the expansion that I was looking for just yet. But what we aren't seeing is breakdowns in market structure. And that's all that matters, right? We aren't seeing this as a deviation, right? And then, post-halving is when everything's going to happen. I still do not believe that. These structures are telling me that major expansion is next, and the structure is still intact. Finally, let's go to Link. Link on the weekly. I don't remember last time I did Link on this video. Maybe it was this summer, and we were down here in this massive accumulation range. And again, this just, I love, and this goes back to the bullish trends, right? I love these Wyckoff accumulation events, accumulation spring, accumulation, last point of support, and then expansion. Where was the retest here? Where was this retest of that breakout area? It never happened. In true high time frame, bullish, expansive trends, when accumulation is done, the sign of strength in the market is not giving people proper entries that missed out on accumulation or entries back in this region. The market's just not going to be that rewarding. And so Link broke out, and 2-month consolidation appears to be breaking out, and it's breaking out of a very bullish type of structure, this rectangle type structure. And my expectation is from here, given you get this weekly close above 16,777, which again appears to be on track, the early stages of continuation. First target being 38.37, and then kind of reassess from there. So, folks, that's the weekend market update number 2. Hope you have a great rest of your weekend, and I will catch you on the flip side next weekend. Take care.